Hey everyone, welcome. I apologize for being a few minutes late. It is 1:05 on June 6th, so 5 minutes after the market closed. We were expecting a limited ability for the market to go up today and in the near future, and we got exactly that. We were actually down slightly, 0.01%, but really that's a chop sideways. So because of that, I am going to change this box to include our yesterday high and today high and just make our box like that. So still looks like we are chopping sideways. We did not get that volume that we were looking for in the markets, although since the average volume has been coming down and we did get, what is this? Oh, not, nope, sorry. We're only 24 million. So even after a dark pool, we'll be at 35, maybe 40 million. We're still well under the average volume here. So it's been a few weeks since we've been really light volume, and that is going to limit our ability to continue to move higher. This morning, we talked about how really everything is riding on the coattails of NVIDIA right now. We do have the catalyst of the stock split, and that will probably drive a lot of money in, but it's going to be kind of interesting because we have a situation where people in these days, we have a lot of retail options traders. Ever since COVID, a lot of new money came into the options markets because it was attractive. People were sold on this idea that they can make outsized returns much more easily on options. So there's a lot of people looking at NVIDIA options, and when we see increased volume in the options, we may be seeing activity that outstrips the number of shares. So in that case, market makers will have to scramble to buy shares in order to cover and hedge themselves against any of the options that they're selling to these retail option buyers, which suddenly becomes much more affordable. The options become much more affordable when the stock becomes much more affordable. So we may get a situation where the options start to dictate price of the stock rather than the other way around. And that's usually not a great situation to be in. So we'll see what happens. That might offset some of this pressure that we're starting to feel in the bond markets. So you can see that bonds were not able to continue to move higher. They're down 0.13%. So we said this is likely going to peak out and start pulling back. And we didn't make great progress towards doing that, but at least we made a little bit of progress. The high today was 93.43, and the high yesterday was 93.35. So we did get a tiny bit higher in terms of the high of the day, but we did come down, and we are down 0.13 or 0.12% or 0.123%. So we will expect this to come down. If we hit this top of this channel again, then we may go, or I should say, if we break through the top of this channel again, we may expect that we're going to continue to move lower to the bottom of the channel. That is just the greater possibility between now and July 31st. That puts pressure on our equities markets, and we're going to see limited upside, maybe even a pullback, another pullback before we can resume upwards. Let's take a look at our sectors. That's going to be the most important thing to look at today to see where money moved. Yesterday was all about tech. So if we start to see it broaden out, that's much better. Or if it's still concentrated in tech, then we're going to be a little leery. Since it's a sideways moving day, which sectors went up and which sectors went down is going to give us a very good clue as to what's happening inside of the sector rotations. Okay, silver and gold at the top, very defensive. Then we've got consumer discretionary up at 0.72%, energies having a little bit bounce, staples, healthcare. So a lot of really defensive sectors, with the exception of consumer discretionary right here. Then we've got retail, which is similar to discretionary. Then we have the industrials. So it looks like we're catching up a little bit. Let's see how Dow Jones did today. Up. Okay, so we're almost through this resistance that we were talking about yesterday, but we try to poke our heads above it, but then we actually close below it. So we're still in that region, but at least it went some way towards resolving that disparity we're seeing between the Dow Jones and the QQQ. So let's take a look at QQQ and see where that is. Okay, so QQQ is down 0.06%. So it didn't do that much in reality. We're not going to get too excited about that, but for now, the Dow Jones did outperform on the day, but not significantly. It's only up 0.22%. So really, most of this is just sideways chop. Again, I want to see at least 1/3% in order for me to consider it non-random. And the more significantly above that, the better. So everything all the way in between from XLK all the way up to XRT, XLV, we're going to just consider that random movement, random chop sideways. So what I really am comparing here is gold, silver, XLY, XLE, XLP to defense, industrials, the QQQ, SMH, and XLU, XHB. So we're not too surprised that these two came down because the TLT still hasn't collapsed yet. Once those collapse, then we will see a sell-off in the interest rate sensitive sectors. And then SMH is just profit taking. It just popped into a crazy high yesterday in the semiconductors and NVIDIA. So if we look at SMH, we just popped up a huge gap up and then traded higher to a new all-time high. And then today we hit another all-time high, and then we just traded off a little bit. So it's not surprising, but realistically, it's only down 0.79%. It's not that big of a deal. We're well above the EMA 8. This is due for a pullback, but it may not be immediate. It might go up for a couple days before coming back down. And then NVDA, the star in that sector, same thing. It's just been going up so much. And we just had a day where we hit another high, but we did pull back. We did see some profit taking. And with the stock split, did it happen? No, it's right here. It's on Monday. On Monday, with the stock split, we might see another surge coming in. So I wouldn't get too excited about the fact that this came down. I wouldn't be buying calls on this either. The options, the market makers are going to be either widening out the spreads or adjusting the implied volatility so much because it's such a big market event and a flood of money is anticipated. They need to cover their butts. So they need to make sure that they're not going to lose a lot of money in those transactions. So those options are going to be really expensive. So I wouldn't be looking at calls in NVIDIA anytime soon, or at least not a single, right? And definitely not a naked option. So we want to make sure that there's a defined risk if we're going to go in to do something like this. Okay, and then yeah, so that explains the bottom half. So really, I'm just looking at XLI, ITA, and really, if I just say anything under half a basis point, I'm going to consider random for now. Okay, so I'm just looking at XLI versus XLY and silver and gold. And then we've got the interest rate sensitive ones, the Russell 2000 IWM would be another interest rate sensitive one. So we're really just looking at XLI versus XLY. XLI. Not looking great. It's just chopping sideways, not looking strong, not looking particularly weak either, but it's looking weaker than it is looking stronger, and it looks like it's probably just going to chop sideways. XLY, some strength popped up above his MA50 right into his MA90. So we'll see. There's probably a pocket right here. Our volume, yeah. So we're going straight into that pocket. It's going to be some pretty heavy resistance. So I wouldn't be surprised if it gets stopped right here. But if it does break out with conviction, then it can go a lot higher. But given how we feel about the overall markets and the likely direction due to pressure from bonds, then it's probably going to come back down. We have a higher probability of it coming back down. What could change those probabilities is the reports that are coming out, the employment situation, the CPI, the PPI, those could all change the probabilities. So this is not an environment we want to make huge bets in anyways, because those reports are not particularly predictable, and then that makes our statistics weird or unreliable for that period of time. So we'll wait to see what happens for tomorrow, and then I would certainly be neutral going into that CPI and PPI. Okay. All right, so we're going to end it right here. I'm still feeling the effects of my morning hiccups and all the allergens in the environment, so I'm just going to get out of here and get some fresh air. So have a wonderful rest of your day, and I will see you tomorrow.